Good morning, everybody. Good morning, blockchainers. Good morning, DeFiers. Good morning, Dubai. Good morning, flat world. Welcome to Digital Week Online. It's a pleasure to be with you here today. I'll be moderating this panel and also introducing a combination of very long-time colleagues from the various corners of the planet that are working in this field and can bring a lot of insights from East, from West, South, and I think this is going to be quite an interesting panel. The topic, of course, is the new challenges associated with DeFi. As you know, we have created a big ramp and a new exciting energy that has reached the blockchain world, like we have seen about 6 or 7 years ago. So this is quite important and quite interesting. And I think we have Shariq also joining us in any minute now, which is the last panelist. Myself, I head an organization called Global Blockchain Organization, and I'm a member in quite a few of the projects, including some of the ones that are here today. So this is for full disclosure, so there's no surprises to anybody. So without any further ado, I will just go a very quick round introduction to everybody. And we'll go, I guess, maybe left to right. We'll start in Abu Dhabi with Saeed El-Damaki. We have been pleasure to do quite a few interesting things together. So Saeed, please take it over.
Thank you, George. Good to be here. Hopefully it will be an engaging discussion and interesting for everybody. Just a quick introduction to myself. My name is Saeed El-Damaki, co-founder and managing director of Alphabet Digital Currency Fund, chairman of eGovern, which is a blockchain consultancy company. And I've been investing, trading, advising a lot of different crypto projects over the last 4 years. And I've been involved in the DeFi crazy world only in the last month. I jumped in a bit late. I was waiting for, things to quieten. Well, they haven't quietened down, but the DeFi market to mature, and I don't know if it's matured yet, but I think it was a good time to enter a month ago. I'm still learning a lot, and very interesting developments happening, a lot of innovation, and look forward to discussing this here.
Yeah, I think we're experiencing probably DeFi 1.0. I think once we get to 3.0, things will get a bit more mature and calm. So we have also on the other side, also in Dubai, Jason King, which is leading a DeFi project that is being launched as we speak. So Jason, please take it over.
Hello, everyone. My name is Jason King. I'm the co-founder of CGS Dubai, which is a management consulting company based out of Dubai that we are advising blockchain projects and ultra high net worth on anything and everything related to crypto and blockchain. Recently, one of my ventures was DeFi Games. This is a DeFi token studio where we are aiming to, create different kind of DeFi tokens in the DeFi craze that we've seen. And recently, we've been early investors in some leading DeFi protocols, such as Bella Protocol, that was recently launched on Binance with a launch pool, and also some other DeFi projects. We also recently launched a Sashimi Swap, and to name a few. So there's some exciting projects on the horizon, and happy to be here. Thank you all for the invite to be able to speak about DeFi. Thank you.
We have also Sebastian, which is probably in Malaysia or Singapore, but I think Malaysia.
Malaysia.
KL. Okay, close enough. It's just next door. He's heading interesting project focusing on healthcare with Avantas. So Sebastian, do give a bit of introduction and how are you introducing DeFi into that whole solution as well?
Yeah, okay, my name is Sebastian Diacono. I'm actually from Romania, but I am in Malaysia for 3 years plus actually. And I am currently the CEO of Avantas Technology Accelerator. And as Jorge mentioned, we are focusing on enterprise blockchain solution, and one of them is with prime direction to tackle the COVID-19. It's called MedSlock and has quite a extensive pack of suites for all the steps, including vaccination process and everything. But to be honest, strictly on the DeFi part, I am still looking at the phenomenon from outside. But I actually did a lot of reading. I didn't engage into it because, as Jorge mentioned, yes, it's 1.0. There's a lot of challenges. There's a lot of things to be sorted out. But honestly speaking, I think this looks like the second wave. Like the ICO was in 2017. It feels like, but hopefully in a much better way. That because the future is the decentralized finance, definitely. And I was looking forward to discuss about the challenges, because I think there's a lot of potentials but there's a lot of things to be sorted out here also. Thank you.
We'll address that. We have also Fernando from London. Fernando is visiting us. It's a little bit closer, so I guess the weather was not so good in London, so he decided to pay us a visit. So Fernando is also creating some DeFi projects, specifically associated with gold tokenization, but others as well. He has a background also like me in cybersecurity. So Fernando, go ahead.
Hi, everyone. A lot of familiar faces here as well. So yeah, unfortunately, I didn't come for holidays to Dubai. It's work. So the weather is much better. But, I'm my background, cybersecurity, tech, you name it. Have done everything. Big data, machine learning, AI is one of my favorite things, and of course, blockchain and crypto. So I'm now helping a few organizations. I decided to take a little bit of a break from cybersecurity, and DeFi is I'm similar to Said, what Said said. Around August I start. Well, we already knew about DeFi, but is when it started really to kick off around August, is when I decided to dive a little bit more, and I understood that really this is just the beginning. Hopefully, and I think we're seeing the cleanup has started quite early, so it didn't happen like in the ICO, which lasts quite a few years. So I will discuss that. In my opinion, this is the right time to actually be doing and creating some very exciting projects in DeFi.
I have the last panelist who just joined us recently as well, is a great colleague. We have the pleasure of working together in several projects, including some that have some persons in common, like Mohammed Salman. Shariq is heading a project in Estonia called ZXC, which has recently introduced also a DeFi component to its project as well. So I'll let Shariq introduce himself. Go ahead, Shariq.
Thank you very much, George, and thank you very much to all of the panelists over here and this Digital Week online conference. Yes, I'm Shari Kashmi. I'm the lead ZXian, or the co-founder or the CEO of the ZXC ecosystem. We are the hybrid solution provider. We are exchange and finance platform within one umbrella. So it's a hybrid solution, and we have been doing this decentralized finance. We actually, by technical architecture, if we are discussing the technical architecture, we are giving the same technical architecture which is utilizing at this moment 60 to 70% almost 3 years ago. So 3 years ago, the market was not that much mature. So that is a decentralized finance component within our ecosystem. Moreover, we have published our smart contract based decentralized finance component almost 5 months ago, when nobody knew about this decentralized finance, and it's already on Ethereum chain. So it's called DAO ZXC. DAO ZXC is our decentralized ecosystem, and it's totally backed by one of the component that is called DZX token. So all of the smart contract base is automated. So everything is automated within this smart contract. So that is our decentralized component within decentralized finance space. So regarding decentralized finance, that was our introduction. For the centralized exchange and finance, we have been working in the industry for the last 5 years. I was the ambassador for Lisk ecosystem, which is a delegated proof of stake. And if you have heard about the recent development within our ecosystem, is that we are working very close with the consensus regarding the paradigm shift from proof of work to the proof of stake, and is proud to be a part of being a delegator and validator for one of the consensus activate scale program. So that's our background regarding the finance, especially centralized and decentralized finance. Thank you.
Okay, perfect. I have at least about 6 to 10 challenges that I consider extremely important as we move towards DeFi. I'll try to maybe highlight maybe the top 5 or top 6, and then I would like the audience to contribute, or my panelists to add their 2 cents and their experience in this. So let me go maybe through this list very quickly. One of course, is my passion is cybersecurity. So I do believe DeFi has got an extremely risk aspect associated with the security of the smart contracts. So being able to audit them, understand there's no vulnerabilities in the code. We have seen some DeFi projects crash as a result of the DeFi contracts not having the proper audit or the proper cybersecurity in place. The second element I think is very important is the area of KYC. In the area of DeFi, KYC does not seem to be as important as in CeFi. That really means people get in, put their tokens, swap tokens. Nobody knows where the tokens came from and where the tokens may end up. So some people, definitely regulators will have an issue with that. That brings me to the next third point, which I call compliance. It's very easy to regulate when there is bricks and mortar, but when the code executes in the blockchain, how do you enforce compliance in such a virtual environment? Or maybe that's the objective, no compliance. Fourth point I would say is liquidity. I think the liquidity varies from no liquidity to too much liquidity. We saw DeFi in some cases in less than 3 months become bigger than Binance, and then people having to react to it. I think the fifth thing I would call is teams. I mean, in DeFi, who is really heading or writing the code? The teams are virtual. Some DeFi projects do publish their teams, so we know who's behind it. But the other ones, they stay completely incognito. Maybe there is a reason behind it. Sixth point, I think, is also important. Although we want to live in the matrix and in the virtual world, fiat is still there. So in DeFi, it's very difficult to convert crypto to fiat, almost impossible. So really, you still need a combination of DeFi and CeFi to have some exit towards the DeFi world. And the last point I would say is the upcoming changes in things like, for example, Ethereum 2.0 and others that will introduce, instead of proof of work, proof of stake, which will dramatically change the dynamics of how DeFi and DeFi costs. So either costs will go extremely high or extremely low. And this will have a serious impact on the viability of some projects, but it'll also make other projects much more viable as they are. So Saeed, tell us a little bit about what is your hot topics or the contribution to my top 8 or top 7 list.
Yeah, I think you pretty much covered most of the challenges and issues that are in the market nowadays. I mean, I think the number one thing for me, for people that they would need to consider before jumping into the DeFi rabbit hole is they need to be actually very much knowledged and have done a lot of research on DeFi before they decide to jump in. I mean, most people are just chasing the high yield numbers. They only look at the high yield numbers and then they just jump in and then ask questions later. Whereas actually it should be the opposite. People should be asking questions and doing a lot of thorough research before they actually jump in. So you need to, it's a new area, it's a new sector. So I think you have to do a lot more risk mitigation and analyze all the risks involved before you jump in to go for these rewards, because ultimately there's always going to be yield and returns to be made. There's a lot of projects that are coming up. There's a lot of opportunities to make a return, but you have to minimize your chances of losing money rather than, you want to make more money than you lose. I'm not in this DeFi space. If you go in thinking that you're only going to make money and you're not going to lose money, then I'm sorry, but you're going to end up losing way more than you make. So I think there's a lot of risks involved. it takes a lot of time and effort and energy to weigh up all these risks. And yes, some people might argue, oh, but if I take all this time to study all the risks, then maybe I'll lose out on the opportunity that's there. Um, but I mean, that's entirely up to you how you want to do it. But for me, I would rather take my time and weigh up the risks versus the rewards before I jump in. So I think
It's the
it's a
balance.
matter of the people who, different personalities, different appetite for risk means different people will look at it in a different way. Some people who love to take risk will, they'll say this is perfect for me. Other people who don't like to take risk, they'll say no way, I'm not getting into this. But there's also options for people who don't want to take too much risk. In that, you can go into some of these DeFi projects where it's based on yield, focused on stable coins rather than actual Ethereum or the actual tokens of the projects in question. So you just deposit DAI, or you deposit Bitcoin, or you deposit stable coin USDT or whatever, and you generate smaller returns. So it's more less risky, less returns, but that's a good solution for people who don't want to take too much risk. So there's something for everybody there.
Yeah, so balance for Saeed is FOMO, which is the fear of missing out, versus the high or low returns, so realistic returns. Jason is a fast guy, so Jason likes to create big returns. So Jason, tell us how you're driving on the fast lane versus the slower, less risky lane.
Thank you, George. I think Saeed pointed out very well about some of the issues that are sort of nascent in space that we've seen in the last few months. The insane APYs and very high yields are simply, I don't think it's sustainable now, because you sort of see the similar patterns play over and over again. A new project pops up, and I do believe, now this is not insinuation of any kind, I do believe there are groups of whales, that a few of them, or whoever they may be, there's about maybe $500 million of liquidity in any given time that are just flushing around, and they follow each other, right? They may not necessarily know each other in the real world, but because of Ethereum and blockchain, you are able to sort of track who is sort of jumping into all the new protocols. So literally, even doing on-chain analysis, you can sort of find a lot of very interesting trends and patterns that are occurring in the various protocols. Now, to kind of point about the very high yields that are sort of being shown, many of them are simply unsustainable, because many of them are simply printing, the printing of new tokens by farming in its current form isn't sustainable, because until the demand or the initial FOMO runs out, there will be no new buyers. So essentially, you can think of it like a Ponzi scheme, right? Where the early farmers are essentially getting the tokens early on, and they're selling it to the people who come later. But because there's not much utility beyond that, there is no incentive to hold the tokens at all. So therefore, once the initial wave cashes out, people are left back holding. And and I think it's good, because similarly, like in ICO, the same thing happened, except it occurred over years, right? But in DeFi, and I think as we go on, the blockchain crypto technology speeds up all of these cycles. So instead, now you probably even see projects, die within, a few hours or a few days, versus months and years that we've seen in ICO. Now, one last point to wrap that up is one of the very interesting parts about DeFi. Now, I understand George pointed out a lot of these risks and these problems. And I think one of the areas that we're looking at that's very interesting right now is simply what we call the DeFi insurance. And this is basically the ability to, in a decentralized way, create insurance pools across different assets. So essentially what you're doing is just mitigating the risks of a lot of these protocols and a lot of these, basically decentralized financial institutions and financial infrastructures, and creating layers on top where the risk can be mitigated to other risk takers. And I think that's one of the areas we're also thinking clearly on.
I was looking at the statistics of the speed at which coins were being created. And I think coins are at one stage were being created at a rate of one coin every 30 seconds. So obviously, I think we have a great degree of hype, and I think we have to come down from this hype. And I think Sebastian, because he works for Avantas, it's a grounded kind of organization. So how do we ground this DeFi on some solid ground so we build it up properly over time?
Yeah, that's a good question. And since I think probably I'm the least experienced in DeFi from this panel, I will just, I think that at this moment, as you actually mentioned, a lot of the points that I wanted to say as well, I just feel that it's some sort of the crypto casino sometime. It's a lot of like, people seem like they just gamble. Okay, let's make a quick buck and let's get out. And this is the initial feeling. And it's a lot similar from this point of view at the ICO hype in 2017. To make it, because as I mentioned earlier, we are focusing more on enterprise solution, but I was the CEO of a centralized exchange for a number of years. So I know that this may sound a little bit weird because we're talking about decentralized, but I think a little bit of regulation is necessary, a little bit of control of what is happening, because I feel that is a bit is a bit out of control. And me personally, I will not jump in DeFi at this moment because I don't feel that it's yet mature. And I think the scope of decentralized finance, although we have the lending, which is fine, and the insurance is coming, as Jason mentioned earlier. I think the final focus is not there yet. People are taking advantage the way that they did 3-4 years ago, and I'm just waiting for this to go away a little bit and to have the pure purpose of decentralized finance, which means eliminating the middleman and have people interact for various financial products. And this is what I think.
Fernando, can gold introduce stability into DeFi by creating more stable coins or more stable yields?
I think I just want to make a few comments with what all the other panelists said. So I think that a lot of the stuff happening in DeFi is not really finance. Let's be clear about that. There's a lot of gambling. There's a lot of gaming. There's a lot of gaming theories. Lots of projects coming. It's just pure gambling. So let's not call it decentralized. The true significant of decentralized finance. Yeah. Because those are peer-to-peer loans. It doesn't matter what type of loans. Yeah, insurance. Just think about finance today, and it's actually going there and look at what exists in finance and try to grab a piece of all of that and try to decentralize it. That's true DeFi. Yeah. And there's a lot of projects coming, like Said said, and some of them, George and I are working together, and we all are here working with different people on true decentralized projects, decentralized finance projects. So one of the key things to all of this is education, and tell people, that a lot of what's happening is not really decentralized finance, and this is extremely important to gain confidence so that people come earlier. And some of these things, I don't mind. And of course, there's space for everyone. As long as whoever does gaming projects are very clear, hey, this is a pure gaming solution, there's gaming theory, that's fine, because then people know what they're getting themselves into it, clear messages. And I support that, by the way, because I like some of these gaming theories, I get involved and get excited as well about that. Gambling as well, because there's a lot of things that you can do with it and be clever. But, we really need to think and go back to what it means decentralized finance, what are the type of projects. When it comes to regulations, just very quickly, because we need to talk about many things, so I want to be short, is that regulators are struggling a little bit, because I spoke recently with a few people that are closer to regulators, which is if you don't raise initially, then it's quite hard, because the way things are seen is you're just swapping something, as long as when you do a swap for fiat, you are then, or fiat to some cryptocurrency, you have to go to a centralized exchange, right? Like George said. So they see it as a disbursement, You know, how are you going to regulate when people swap one thing for the other when they see it as a disbursement? Yeah. And they're trying to figure out things. So it's quite hard as well from a regulator. And by the way, don't rely on what I'm saying, okay? Just do your own research on this, you know? This is some of the things that people are sharing with me and some of the things I'm thinking about. So it is quite hard for to figure out what to do and try to regulate. So, you know, are you going to regulate and do KYC on something that, you know, actually it's quite hard to do, not to do the KYC, but what is the legal framework? What are what are the things you need to think about? Because a swap and a disbursement, maybe yes, maybe they'll come up and they'll say, yes, you need to do KYC for everything. And then we get to the next stage. So there's a lot of questions and I don't think many people have the answer still, yeah?
Okay. Maybe we need to introduce a new term. Instead of DeFi is DCA, or the distributed casino, distributed gaming. Why not? Let's call it exactly what it is. But I want also a little bit of Shariq to introduce how he has tackled this, because he has been obviously merging the two worlds together. So there's a little bit of solutions that are not pure just DeFi. It's a combination of DeFi and CeFi together. So Shariq, enlighten us a little bit. With unzoom, you have to unmute.
Yeah, sorry, George. Yes, George. So initially, that's what I have mentioned. When we have given this technical architecture around 3 years ago, it was the combination of both worlds, centralized finance as well as decentralized finance. Okay, so now we are putting it in the maturity level, because at that moment, this ecosystem was not ready for it. So in addition to your points about the challenges, okay, these are the fundamental challenges, okay, or the initial challenges which are depending on each individual as per their risk mitigation or the risk management. But I'm going to add some technical challenges. Okay, so because we are at this stage of DeFi 1.0 and it's going to be mature gradually, and we have seen so many rug pulls in the last 3-4 months. But in addition to that, when we have initiated this process of DeFi all over the world, we have seen the total value lock was around $2 or $3 billion in the month of July. But in the last 3 months, right now, the total value locked in automated market making is approximately $12 billion plus. So this is actually 1,200 times, or we can say 600 times in the last 3 months. Why? Because there is a greed, there is a FUD, actually fear, uncertainty, doubt, and there is a FOMO as well. But let me discuss technical points. Okay, there is no DeFi actually. There is nothing decentralized, because all of this ecosystem, either it is centralized or decentralized, is on centralized servers, okay, or centralized cloud. With this consensus activate program through Scale, what we are doing, we are developing a decentralized cloud, okay, or decentralized storage, okay, by utilizing the nodes of regular systems. So right now, if I am saying that if Amazon, AWS, they are going to shut down their servers, so there is no decentralized. So there is no concept of decentralized at this moment. Regarding the finance or the peer-to-peer, we have given the architecture for SME, small and medium enterprise, in the same calibration of peer-to-peer financing or lending or borrowing. Okay, so this is under same thing for the regulation purposes via Estonia. They were not ready, but now they have started working it out in their internal legal department. But I am adding some technical points right now. The major the issues or the priority issues we are facing, because all of the decentralized finance is majorly on Ethereum blockchain. So we have been faced 5 major issues, which are scalability, speed, throughput, okay, interoperability between the chains, okay. So these 4-5 issues, and the fees, especially the fees. If you have heard about it, the fees was like skyrocketing in the last 2-3 months when this DeFi was on Ethereum. So these 5 issues, including the fees structure, has been gradually resolved by utilizing this consensus activate program, or where much more layer 2 solutions provider. So we are working fundamentally or technically on this space in order to integrate both worlds together for the centralized finance as well as decentralized finance. But technical integrations are very important, because financial things are, or the risk mitigation, are individual. Okay, we are working on a very large scale applications with these organizations as a ZXC ecosystem. And we have been approved due to the reason that we have given this technical architecture 3 years ago. So this is the point. If we are working on the scalability, which is the major issue at this moment within this DeFi or the blockchain ecosystem, then we are going to get much more institutional investors on institutional large scale applications on this decentralized finance or blockchain ecosystem. Because at the end of the day, decentralized finance is and will be a part of this blockchain ecosystem.
Okay. Actually, Shariq, you brought 2 or 3 important elements. And one was that definitely DeFi depends on traditional cloud infrastructure. There has been several DeFi projects that crashed, some up to 24 hours as a result of Google Cloud or Amazon Cloud not provisioning the resources to the project. So to some extent, they have a combination of centralized and decentralized. The second point was the cost of fees. And I think although the Ethereum network has been very fast and has embraced DeFi very well, there is new networks like EOS and Tron that are coming behind the scenes and are slowly, but they're moving much slower than Ethereum is. I want to now focus a little bit on another area, I think, of DeFi. And apart from the challenges, I want to see what is the real innovation part of DeFi. Let's pick a project like, for example, DeFi insurance, or the capability of somebody staking a few tokens to deliver insurance to somebody. Or, for example, just a traditional bank loan. So somebody loans some money to somebody else for a fee and a small commission is charged. Or even the concept of what I would call the neobank or the virtual bank. Is DeFi enabling us to create the virtual bank of tomorrow, which means the bank without employees, the bank just running as code? I think we're probably a little bit far away from that, but let's take a few steps on the positive aspects. Go ahead, Fernando.
Okay, so I want to take very quickly a comment on that, because it absolutely is very, very important. Yeah. Before I do that, I want to say that if you do a DeFi project as a decentralized project, you want to have the concepts of dApps, okay? And you just don't use one cloud provider, okay? You just go to 2, 3, 4, and then you are safe if you have a proper structure. You know, if you have designed your architecture in a way, you have your dApps and your infrastructure distributed, and you know there's a lot of solutions and there's a lot of good architecture models to do this. But going to what you just said, it is extremely important people start to understand that DeFi means giving people control of their own finances to do whatever you want with your crypto. Yeah, DAO is a very, very big important part of this, because what you don't want is to have a centralized bank again. You know, you really need to, if you're going to create a bank, and I know that there are some people, I know some of these people that are creating banks at the moment, and they will come soon to DeFi. But you'll have a DAO, which means people, you know, that are providing liquidity are the ones who are going to choose and vote for a lot of what's happening in that organization, which is a true decentralized organization, no single control. So to have a true decentralized project, you have to implement a DAO. There's no other way. Yeah. Otherwise, we go back to a lot of the things that we've been discussing. And for me, the main concept, it doesn't matter if it's insurance, banking, whatever you want to call it, is really giving the ability for someone to come and say, it's my own money, it's in my wallet, and I'm going to provide liquidity to a pool that has a dApp behind it. Being a bank, there's a DAO. Depending how much liquidity I provide, I have my share of voting on that DAO. Yeah, this is true decentralization. And this, when people start to take this more serious in every DeFi project that they do, then we start to achieve true decentralization of finance. Yeah.
Okay. Said, tell us the view of the regulators and the good points about how DeFi can help us from Abu Dhabi and ADGM perspective.
Yeah, I mean, what Fernando said about decentralized structure in the form of a DAO is absolutely spot on, I think. If you have a structure whereby decisions and proposals are made in a decentralized fashion, that's when you have a decentralized structure. And ultimately, the decisions made in that project will be decided by the community and the participants. So I agree on that. In terms of regulation, I think, see, you can only regulate something properly when there is a central part to the equation. If you have a completely decentralized project, and also especially if they didn't raise any money using a pre-sale mechanism or a token generation event, or a token, not token generation event, rather a token sale mechanism where the founders of a project or the team behind the project collected money from investors and then issued a token in return, that's when something needs to be definitely regulated. And that happened in the case of ICOs, where people were raising money and then offering tokens in return. But the problem happened when the founders of these projects did not deliver on all the promises that they made. So that's why you're seeing nowadays a lot of cases of the SEC coming in and trying to hold these founders to question and giving them fines, etc. But I think with DeFi or these decentralized projects, it's difficult to regulate because if there's no fiat involved and there's no token sale involved, whereas most of these new projects that are coming up, they're just simply putting the Uniswap liquidity pair on Uniswap. They're putting in Ethereum, for example. They're putting in their own tokens. They're putting it there for people to buy and sell as they see fit. So they're not actually taking money from investors as such. And then, it's a utility, basically. People are buying the tokens and then they're staking the liquidity provider tokens in return for reward. So that's a clear utility case. The regulators can't really, step in and regulate this kind of structure. In terms of also decentralized exchanges, that will be extremely difficult to regulate as well, because again, there's no fiat involved in the process. So people are just depositing Ethereum or USDT or one of these tokens, and they're buying other tokens and trading. So again, it's difficult to regulate this kind of structure. So even though it would be great if there was regulation, but at the same time, I think it's not practical to expect regulation to come into these decentralized approaches to projects. So I think that's a while away yet. But I think it's a self-regulating environment, right? If you have projects which are actually truly decentralized and have a DAO structure, and the decisions are being made by the community and everything is going as per the community, then I don't think there's anybody that will feel that they've not been heard, or their opinion is not important, or they feel that they've been cheated in some way. So it's a self-governing approach. I think this decentralized structure that's becoming more and more popular. So I think also, if you think about it, if as long as there's, for example, yield farming or there's staking of liquidity provider tokens, that is actually decentralized finance. Because ultimately, what is finance? Finance is when you put money and you expect to make money on top of it, right? So if it's decentralized finance and you're putting money in, for example, even if it's just to farm or yield farm, you are expecting a return on your investment. So it is actually DeFi project. I understand there is some structures where it's purely gaming. There's like this token that I know, it's called war games, where people just do battle, and then the loser loses their reward tokens and the winner gets the reward tokens. There's another one that's going to be a casino one that I know the founders are coming up with it, and it's going to be purely based on gaming, casino gaming. There's lottery style ones where you stake the tokens, and if according to your proportion of the total amount of tokens, you have a better chance of winning the lottery that happens on a daily basis or a weekly basis or what have you. So yes, there are those projects, and those projects actually disclose. They say, yes, this is how you can get the reward, either by staking to win the lottery or etc. So that's clear, I think. So I don't think there's an issue with that, and I think everything's in good order. It's going to take time, but it will come around soon enough.
Yes, we're almost running out of time, but I want to Jason to also give his little view on the positive aspects about how DeFi is really creating value. So, Jason.
Yeah, so one of the positive things, like from a personal perspective, I mean, I started doing crypto because of decentralization and the power to be able to control, your own finance and your own money. So in the last few months, I've personally moved away from centralized exchanges. So if you've seen, for example, KuCoin was hacked for close to $200 million. There was BitMEX is now under U.S. Government indictment for whatever reasons. And I think the more these things happen, the more concentration of money, as we always say in crypto, if you don't own the private keys, it's not your crypto. I think it's also the lesson for people to learn that, you should learn how to manage your own crypto assets. And if you do want to entrust your assets to other people, do understand the risk involved with that. And if something, bad happens, then we have to mitigate the risk accordingly. Now, one of the things that for me, even regarding with the whole Ethereum and DeFi ecosystem, I personally use a lot of wrapped Bitcoin. So you've seen wrapped Bitcoin gone from literally a few months ago from like, I think maybe $50–60 million to now we have over $1.2 billion of wrapped Bitcoin on the Ethereum ecosystem, where you can basically, and I also use a lot of MakerDAO and DAI and Compound. These are battle hardened, tested protocols that are not bringing, crazy returns, but you're able to, generate steadily 2–3% on the borrowing and lending of stable assets. So there are ways in the DeFi space to generate solid yield far better than the existing financial, I mean, pretty much any banking or investments in the legacy financial systems. And I do think that the more people learn how to leverage and utilize a lot of these protocols have been built over the years. Some of these things have been around for many years. It's nothing new. Me personally, I take it for, if you're looking at it from an investment perspective, definitely work with battle-hardened, audited, time-tested protocols where you can trust your money to. It's not like DeFi is, I mean, at the end of the day, DeFi, you still have to trust the team and the smart contract and the code on the blockchain, and some person wrote it, right? Unless we have an AI that's able to knock out, these smart contract codes on demand, there is a human factor behind it. And I think at the end of the day, looking at any project, and Sebastian, George even said, yes, some of these projects are anonymous. I think personally, look at Satoshi. To this day, most of us still don't know who Satoshi is, but his code and on the blockchain, the product speaks for itself. So a lot of times I think it really doesn't matter for me personally who the founders are, but it's all about the result and all about what the application utility that the code brings. In the similar case of SushiSwap, we can see that the community very quickly turned against the founder when he cashed out $14 million. And so I think there is a lot of self-regulation in this industry, and I think people are not stupid. So if something does go bad, very quickly, I think the consequences will overheat the rewards. So
guys, we're out of time. I do apologize. I just want to give everybody a little bit of a closing remark. Any last comments from Sebastian? About
yes, okay. I'll be very quick. I think for me, DeFi should be very simple. Everybody should be able to do in a decentralized way what the centralized financial products should do. Me personally, I will be able to lend money. I can borrow money. I can do basically. I can invest, right? But to do it in some sort of safe way, because we see, for example, now in the lending space, you can actually lose your money, which is very risky. So in a less risky way, and I would not say regulated, but at least, I mean, the smart contracts should somehow be designed in a way to protect the people involved in the transaction, the contract, right? Because it's peer-to-peer. So this is how I see DeFi being as an end result, and I hope we will reach to that stage in the near future. Thank you.
Shariq?
Yes, in a one sentence nutshell, yes, it can be regulated and it can be audited. And for the decentralized bank, we are already working with some of the regulators, and we have the sandbox solution as well. So it can be regulated, and decentralized bank is the future. So we are working on it.
Fernando? Mute, Fernando. Mute. Oops.
Sorry, it's very simple. I think people need really to go back to the basics, especially the people who are doing the projects. And I really believe that if we really want to do a true decentralized finance project, you need to go again to the concept what I said, give opportunity to everyone to participate in the pools, create dApps and create a DAO, you know, people feel confidence about that. And why not create a decentralized approach for validating smart contracts from every DeFi, you know, so someone hasn't come up with that, but you know, something kind of a decentralized organization that actually can validate and give a score for every project. So that gives confidence to everyone, you know, that your smart contract, your stuff has been kind of out in an automated way verified and given a score by a decentralized organization, yeah, that knows exactly what smart contract should have and should have, you know. Maybe that's a good idea for someone to kick in a project like that, you know.
Jason?
I think there are definitely ways to generate, I wouldn't say risk-free yield in the DeFi space. But for example, if you're talking about stable coins, the problem comes right now with, for example, a lot of people are providing liquidity on Uniswap, and there's a lot of opportunities for impermanent loss. And that's something to be aware of. However, if you are mainly dealing with stable coins, more stable assets, there are definitely ways to generate very handsome yields without incurring a lot of volatility in the underlying assets. And also another thing is from our side, what we've been working on is the aim is to create a major meta asset empowered by DeFi, because currently the DeFi space is mainly the foundation of it is based upon, you know, for example, MakerDAO, DAI, Bitcoin, Ethereum, USDT, et cetera, et cetera.
So the foundations, okay.
Yeah, so, and we're looking at what is sort of the new potential to create a new meta asset that can be leveraged by sort of existing DeFi ecosystem in anticipation when we do reach 2.0 or wherever that is. We don't quite know it yet, but we do understand the direction of innovation and continuously to come up with, or attempting to come up with usage.
Saeed, 30 seconds.
Yeah, I think a lot of good points raised, and I believe that you know, eventually it will come to a point where actually using DeFi products will be cheaper, easier, faster, more profitable than using centralized finance products and banks, etc. We are on the way to that point. We haven't reached that point yet, I don't believe. I still believe there's a lot of risks involved. But eventually that's the goal, and I think we're heading in that direction. It might take a little bit longer than people like to think, and the hype around it is. But I think eventually DeFi products will overtake centralized finance in the long run.
So I look forward to seeing all online. I do have one project and many with you that will be launching. One of them is launching in 10 days exactly. So looking forward to. Please keep your eyes on social media, and you might find some interesting news as it goes. So it's all a big secret, so keep it up. Looking forward, and thank you for joining me here today for the exciting energy and the insightful comments. And I hope this event continues as it's done all week. And looking forward to meeting you online as well, or in person for the remaining days of this week. Thank you. Bye-bye.
Thank you.
Bye.
Thank you. Good day.